Everyone talked about this rotation in the market. I say baloney. It wasn't a rotation. It was those tech end users that were finally taking pilots and putting it in their business.
The AI trade has stalled, but what if it's just broadening? With the technology being adopted, is everything becoming an AI stock?
It was this massive AI revolution that went from the tech vendors to the tech end users.
We speak with veteran tech investor Kim Bolton of Black Swan Dexteritas. How different does your portfolio look like? Are you still buying tech stocks? Microsoft, as an example, is down 32%. Tell me why it's not a screaming buy from Walmart as an AI stock. Where is it showing up?
There will be humanoids there.
No greeters? Sorry, Barbara. When you choose a Raymond James advisor, you're getting more than independent financial management. You're getting access to complete financial guidance under one roof. From tax and estate planning to trust services for generational wealth and strategies for life's key milestones like buying a home, funding your children's education, or preparing for retirement, they bring it together in one financial plan. What also makes Raymond James advisors unique is their complete independence. With no proprietary product to promote, you will benefit from personalized services, all backed by the strength and resources of Raymond James, a powerhouse with $100 billion in assets and over 520 advisors nationwide. Discover how Raymond James can help you live a life well planned. Visit raymondjames.ca. The content provided in this podcast is for informational purposes only and does not constitute financial, investment, or professional advice. The views expressed by the host and the guests are their own and do not necessarily reflect the opinions of any organization or company. The host and guests may maintain positions in any securities discussed on the podcast. Always consult with a qualified financial advisor or professional before making any investment decisions. In this episode, we talk about Microsoft, Constellation Software, Micron, and Meta, which are all stocks that I own. Hey everyone, welcome to a new episode of In the Money with Amber Kanwar. I hope you all had a lovely long weekend. We are recording before the long weekend has started, so we really have no idea what happened over the last 4 days in terms of the news flow. But we did get a wonderful piece of fan mail, and I guess it's more than fan mail. It has raised the bar for what it is to be a super fan of the show. And I sent it to Jillian. It's Jillian, come. You need to talk about this.
Okay.
Hold on up. We're gonna make Jillian go on camera.
Is this thing on?
Is it on, Georgine? Let's see. Does this sound good? It's on? Okay. Okay, so a super fan, Tim, we know, loves the show. We met him. He was in the Calgary show. He sends us an email. And he has gotten a tattoo, ladies and gentlemen, of the In the Money logo with a bunch of four-leaf, his whole arm.
It's big. It's not small.
It's not small. It's not like a lower back tattoo that you can. It's right on the forearm, and it says In the Money. Lots of four-leaf clovers. Beautiful Gaelic Scottish saying, Slanjava, which means good health. And I couldn't believe it. My jaw is still kind of on the floor. We asked for a lot from our fans, like in terms of comments. And I sent this to Jillian, and I'm like, this is the bar.
I mean, I was surprised. I would say has to be our most dedicated fan.
Like, there's no contest anymore. And also, we can never rebrand.
No.
This is just it. So In the Money logo is never going to get a refresh because of our friend Tim. Thank you so much. If you're watching, you can see it. If you're listening on audio, boy, find social media or something because we'll post it. Tim has allowed us to post it. And thank you so much, Tim and his wife, I should say.
Yes.
They are super fans. I don't know. Should we encourage this? Like, should we see
more? See if people send in more tattoo photos?
I will give you so much swag.
Yeah, definitely the market cap hat.
Tim's getting a market cap hat, whatever he wants. Tim is getting like a lifetime supply. I don't know if I can guarantee that. I should have that vetted by lawyers.
You should check the shipping costs before you agree.
That's true. Okay, so thank you to Tim. And now everybody knows what it takes to be a super fan of In the Money. Well, hopefully we earn that fandom and we continue to. With this episode, we know that tech has been an absolute basket case. At best, a lot of these stocks just aren't moving. Think about NVIDIA, which is basically flatlined. At worst, I mean, they're in an outright bear market. The software sector is down 30% from its recent peak. That's as bad as it's been since the big tech sell-off in 2022. It's against this backdrop that we have Kim Bolton of Black Swan Dexteritas. And our conversation was interesting. It took like a minute to get there, but what I realized he's saying is this tech investor who you think would, be buying the dips in Microsoft and Meta, yeah, he's doing that to some extent, but he's also looking at a tractor maker. He's looking at Walmart and saying these are AI stocks now. And he lays out a case for why maybe the whole market is becoming an AI play. So let's get into it. Kim Bolton, thank you so much for joining me on the podcast.
Thanks, Amber.
I am so excited to speak with you. You are a veteran tech investor, and it's been fun to come to you in the past when it is a booming market in tech. We're coming to you, and it's a little bit different right now. There's a lot of nervousness and anxiety in the tech sector. And it all centers around AI, right? Mm-hmm. We're nervous about how much is being spent on artificial intelligence and whether we're going to get a return. Mm-hmm. And we're nervous about the software industry and how much that's going to be disrupted because of artificial intelligence. Talk to me about how you think about how that's being reflected in the markets right now.
Well, first of all, thank you very much for having me. I wouldn't say that the markets are challenged here. I look at what's been going on for the last 5 or 6 months as a consolidation, and you have that. Of course, you can have a correction, but we've had a correction in the NASDAQ of 10%. I'd get worried if it goes over 15 or 20%. So that would feel more sort of systemic. But right now, you've had such an amazing run for the past 3.5 years. And then you've had 5 or 6 months where you're taking a pause and people take some profit off the table and there's rebalancing that goes on. But if anything, for those that have missed sort of the AI stack, the infrastructure, the platforms and the applications, the enterprise, this is a great opportunity to return to the scene of the crime.
That's a good way to put it. Now, some places it is a consolidation, like NVIDIA hasn't gone down, it just hasn't moved. But in other areas, like software, it's a bear market. It's down 30% from the peak. It's the worst that we've seen since 2022. And that turned out to be a great buying opportunity. But the scare in 2022 was different. Mm-hmm. The scare was rising interest rates. It wasn't about the technology itself. This tech scare is about the tech itself. And as I mentioned, yes, there's some areas where it's just consolidation. The problem with the Mag 7, not that it's like super down, just it's maybe not moving up. It's lost its leadership.
Yeah.
But then, as I mentioned, you've got those software names that are really down bad. Mm-hmm. How is this year different from previous sell-offs than 2022?
Well, in terms of the software, at least for us, we could see it coming. And I think a lot of people saw it coming, and that's why it rolled over so dramatically. Did it really deserve to roll over, 30, 40, 50% for some of them? Maybe because the whole AI revolution is all about elevating the computational power. Not as though it goes faster. you can just do more during that period of time. And, for the software companies like the Adobe and the ServiceNow and the Salesforce, that's the leadership. They had to figure out how to embrace it. And they did a pretty good job when it came to sort of the agentic AI. But a lot of the software companies are having a difficult time trying to sell their AI to enterprises when enterprises can actually use that computational power to do what Salesforce and ServiceNow and Adobe were trying to sell them.
I think this is an important...
Do you know what I mean?
I do. So I want to unpack it a little bit. It's an important point. Salesforce, ServiceNow, they're trying to embed AI as part of their offering, but the problem is you can use something like Claude to replace it. And so that is arguably reflected in the stocks. Salesforce, Adobe, ServiceNow, all down and out. So then what does it take to win? If you're going to tell the world you're an AI stock, it's your job to decipher, well, what is the AI that matters, that's going to win, and which one isn't going to win?
The way we look at it, and just to go back to the software companies, what they offer is agentic AI, which is sort of like a pilot. It gives them a tool, but then what we're looking for in this sort of whole AI arena are those vendors that actually have something that can be embedded into an enterprise, not given to an enterprise's IT department to sort of use as a pilot also, but actually to give it to, I don't know, like the operations side of it, or the finance side of it, or the human resource, and they can actually see the value not only in making their business unit more productive, but it can actually feed to the bottom line.
What's an example of a company that gets that right? An
example of an end user that really is a technology company, and they're starting to pop up, would be like a Walmart or a JP Morgan, and on the finance side, in the healthcare, United Health or CBS. They're actually technology companies because they're using that computational power to give to a business unit to actually feed to the bottom line. So an example would be Walmart. It's probably the poster child out there of enterprises that have really embraced and employed AI. On two obvious fronts. Number one, on the robotics. Walmart has, 10,700 stores in North America. It has hundreds of fulfillment centers. And now when you go into those fulfillment centers, there are more robots than people. And you don't have to pay those guys, the robots, any benefits. They can run 24 hours, whatever you want. So robotics is a big thing, but also think about in Walmart, and they learned this from the days back in the pandemic of how important that whole logistics of the supply chain. And so there are companies out there that have gone to Walmart and given them AI computational power to gather all their data of their supply chain and to actually figure out what's the quickest way to get these parts for a fridge into the fulfillment center and out to the store the quickest and cheapest way.
So like, this is where you start to lose me. And you did bring Walmart as a pro pick. And so we'll get into what it means for Walmart a little bit. And maybe it's an exception because now it trades on the NASDAQ and it really is trying to wrap itself up into AI. But I mean, you mentioned United Health, you mentioned CVS, you mentioned all these companies using it, but that's just like not how those stocks trade. You know what I mean? That's not why people are buying it. Or is your thesis that people are going to start to look at these stocks? They're not going to look at United Health as a defensive or want to know what its insurance business is. They're going to want to know like what it does for AI, right? I mean, no doubt AI is going to transform everything, but is that an investable event for anything that isn't a tech stock?
Absolutely. I think, I'm Amber. I'm a lucky guy because I'm surrounded by very smart people on the research and the software side, and they open my eyes every day to the opportunities of where AI can affect the businesses out there, but even affect us, like our company. The approach to technology stocks is changing so dramatically because for the last year or so, you've heard all about the chatbots and the agents and everything. They're just pilots. They're just tools. But now you can actually take those tools and give them to business units. Rather than sitting in technology, you can give them to business units. We talked about the financials, we talked about Walmart, but even on the industrial side of things.
Yeah, but then it stops being an edge. It's just like the internet. We all have email. It transformed. It made things efficient. Now we all have it. And you're not investing in companies because they have email. You know what I mean?
But it's the trick right now is to figure out which companies in, I don't know, a year to 2.5 years that can actually take these pilots that are being given to them by software companies or even hardware companies and actually put it inside of a business unit to make them run faster, quicker, and cheaper. Now, you can't see it right now today, but you can be assured that these companies, they're not going to waste their time on it. They're going to spend 6 to 18 months to grab these pilots, put it into a business unit, and if it works, terrific. Works means that it actually produces revenue and also lowers costs.
Now, there's a lot that's happening kind of fundamentally that you can say are the drivers for these stocks. Mm-hmm. And there's been so much growth. And I think that's what, the fact that NVIDIA hasn't moved, it makes it even more astounding. And so we've had many guests come on and say, it's just not fashionable. You've been in this industry a very long time. Mm-hmm. The tech can be very fashionable and tech can be out of favor. And so there are those that argue, yeah, Kim, all these great things, but it's just not fashionable right now. Everybody wants assets. They want gold. They want energy because of the war in Iran. What do you say to that? The tech's just not fashionable. It's in for periods of underperformance, not to say the fundamentals aren't healthy. And B, like, what do you do in that environment as an investor?
So if you just take the tech vendors, they account, depending on who you talk to, anywhere between 25 and 35% of the market cap of the publicly traded exchanges. Now, if you start to put in the tech end users, everyone talked about really for, going from September of 2024 to September of 2025, everyone talked about this rotation in the market, right? I say baloney. It wasn't a rotation. It was those tech end users that were finally taking pilots and putting it in their business and creating revenue and lowering costs and it reflects in their bottom line. And people actually, CFOs talk about it on their earnings calls now. So to me, there wasn't a rotation. It was this massive AI revolution that went from the tech vendors to the tech end users. And now you got all these tech end users that probably, whether it's the industrials or the healthcare or the financials, that are truly tech companies. Then you add in another 15, 20, 25% of global market cap, and all of a sudden you have a technology arena that accounts for at least half of the market cap.
So tell me what that looks like in your portfolio. Does that mean if I look at the sectors in your portfolio, I might think, oh, Kim's a tech investor, I should see 20, 30, 45% tech stocks? I'm putting that in quotes.
Yep.
Does that mean that's not what it looks like? Because now you've got what percent is industrials, what percent is financials? Like if we think about those classic classifications, how different does your portfolio look like compared to what people might be used to from a tech fund?
So it's a great question. Remember I said it was sort of like because the market has rolled over a little bit and returning to the scene of the crime, this has been a great opportunity for us to actually skim a little bit of money out of the tech vendors, out of the infrastructure, hyperscalers, data centers, take a little bit of money and new money that's coming in and putting it into Trane Technologies. They're the air conditioning heating company. Eaton Corp, that is a technology company. Deere and Caterpillar. We went to the CES back in January of this year, and they had this massive combine type thing of Caterpillars, and it was for pesticide, and so it had these arms that went out, and now this machine, this combine, can go across the field. In the past, it just sprayed the whole field. Now it has all these sensors, and it can go, oh, there's a weed, there's a weed, there's a weed. And it splashes instead of splashing the whole thing. And it saves Caterpillar a heck of a lot of money on the pesticides. It becomes much more efficient. So there's all kinds of great examples. And then this correction, this consolidation in the market has been a great opportunity for us over the last 5 to 6 months just to take a little bit of money out of the tech vendors and put it into the tech end users. And it's a bit of a calculation on trying to figure out which of those tech end users, because they're still experimenting with a lot of this AI tools and the computational powers and the inferencing that can be brought on by the large language models, but they're using it and they see the value of it.
Now, let me push back on that and just say, and we'll talk about these stocks, but I'm looking at your Deeres, your Caterpillars, your Walmarts.
Yeah.
They're expensive stocks now. Walmart trades more expensive than Meta.
Mm-hmm.
Tell me how that, if I'm looking for growth and sustainability and stickiness and who's really going to benefit from AI and what am I paying for that?
Yeah.
Why not look at a Meta over a Walmart? Like, couldn't you argue that a Walmart or any of these companies that are the new AI companies, they're too expensive now? And all that wreckage and havoc is overly priced in a Meta or Microsoft.
Amber, we invest with the expectation of 6, 12, 18 months. Not right now, because right now, if you're investing for right now, the price action of particular single stocks are really important. So, when we wanted to buy into Walmart or Eaton or Trane Technologies, and we look around and we think, Meta's a little out of favor. Oh, they just lost a court case and it could snowball, right? Mm-hmm. Well, that's probably a good place to take a little bit of money and put it over into Train and Eaton and Walmart.
So you've been using Embed as like a source of funds.
Yeah. For some of the infrastructure stocks. Never thought I'd actually say this, but we've used some money out of Alphabet because, we never ever sold anything, and never sold Alphabet.
You'd be foolish. You'd be an idiot to sell Alphabet. I'm only saying that because I was an idiot and I sold Alphabet. The bottom line is you're not looking, it's not so tempting to you, these low valuations and beaten up software names, as it is to be positioned in who you think the beneficiaries of AI are going to be. Okay. With that in mind, I'd love to go into the mailbag because we have a lot of stocks that we can talk about this through. So let's get into some of these questions. Okay, so the first question in the mailbag comes from Roche on Instagram. Microsoft, has the crowd got it wrong? When do you think we'll see an uptick? What do you think?
It's interesting because when they, in their most recent Q4 earnings, they actually reported, through the various levels of their organization, and they added up $14 billion that is a result of AI. Like in their own business, forget about selling all the stuff to other, their customers, but in their own business, they accounted for $14 billion that wasn't there before as a result of AI, be it in, cost savings or generating revenue. So has the market got it wrong? The pendulum swings. We're not the only one that are looking at tech end users as really the future of the technology arena. And so people look at Microsoft and say, I got a lot of money. People look at Google and they look at Meta.
It's down, Microsoft, as an example, it's down 32%. As I said, below market multiple.
Yeah.
Rarely do you get that kind of setup. Tell me why it's not a screaming buy.
It is.
All right. There we go. We got our answer.
But it is a screaming buy.
Yeah.
Not as screaming as NVIDIA.
Oh, why? Tell me.
Because they have a monopoly. Microsoft doesn't have a monopoly. NVIDIA does. You go back, and I remember seeing Warren Buffett, and he said, if I can find a company that legitimately has monopoly in a particular business, I want to own it. And NVIDIA, when it comes to GPUs, and they've had that for ages, right? The GPUs, it's sort of like TSMC is the king of the foundries. Why? Because they've been doing it for so long. And it's hard for people to catch up because as soon as they think they caught up, then they go from, 6 nanometers down to 4 nanometers, and then they go down to 2 nanometers. But it's just like NVIDIA. NVIDIA, they had the GPUs that service the gaming when you go back 7 or 8 years ago. And then that sort of went soft. And then they found out that, cryptocurrency mining.
Yeah.
They need GPUs. And then all of a sudden, they come out with a new way of stacking the chips, packaging the chips, and packaging up the GPUs to expand computational power so that you can actually develop these large language models that can think light years faster than you and I.
So I'm confused. Are you buying? You're buying tech still, in addition to end users.
Yep.
So you're buying.
So sorry, go ahead.
Yeah, well, I just want to know: are you buying everything? Like, what does that look like for you?
Oh, okay. So all our clients are different, and they all have different needs, and they also come with different baggage. But if we have a client that comes in and just cash, the way we'll build the portfolio, a third in the single stocks, is we'll end up having half of it in tech vendors and half of it in tech end users.
Okay.
But so many of our clients have legacy requirements, legacy needs, particularly when it comes to like capital gains and capital losses, and you got to sort of manage through that. But,
But starting from zero, your ideal portfolio is
50-50.
50-50. Okay, now that we got that cleared up. So you are buying some of these beaten up software names in addition to...
Not the software.
Microsoft, when you call that software?
Yeah.
Okay.
Yeah,
but not
very true.
Salesforce, for example.
Right.
Okay, all right.
Because, the jury's out on that, on how much AI can actually replicate what Salesforce is doing on their pilots and agents, their agent force. That's right, and Einstein and so on. And then they're finding out, but it's the same as, oh my goodness, Google came out with the chip that actually for the memory, and then all of a sudden Micron rolls over because...
Well, that's our next question, actually, is what to do with Micron. So the news that you're referencing is Google comes out with a new type of technology, and I'm really simplifying it. So if you're a CTO, plug your ears. But basically the fear is that it requires less memory chips. And so Micron and others slipped. I wonder too if the war, if it's just it's an easy source of funds because you're sitting on huge gains for memory. So this question's from Stern088 on Instagram. What do we do about Micron? And I'm a shareholder of Micron, so I'd like to actually know, what do we do? Because many are sitting on a big gain. You've got a little bit of a pullback. It might be easy to sell just to lock in that profit.
I'll try to keep it as short as I can, but Micron is still expensive. But if you're looking for a fresh position, it's okay to buy it here. Because, between Micron, SanDisk, and SK Hynix, they're the three. They probably account for well over 85% of the DRAM out there. Manufacturing. But the reason they'll continue to do well is because the demand for DRAM, for memory, for dynamic memory, is so huge within the AI stack that's why all those three. And if you bring in the Google Tensor memory, that just sort of adds to it, but the demand is still larger than the supply.
That's the kind of key question that I had. So it runs up, these memory chip stocks, they run up because of a shortage of memory and memory prices, they skyrocket, they go through the roof, so do these stocks. Then this Google announcement plus war has created an environment where you're worried about demand. It sounds like, what's the signal? What's the noise? The signal is still, it's a supply shortage. And you don't think, is that fully priced into the stock? Can it keep going higher?
I think so. That's why we own it. But it's interesting, over the last 5 or 6 months, during this consolidation period in the tech vendors, what we found, we didn't figure it out immediately, but we figured it out by middle to the end of November. A way to actually own those vendors is through the options. And so we started, and you're never really sure whether it's a good place or whether someone's going to come out and have a new widget that's going to eat someone else's lunch. And so we end up selling a lot of puts on Micron, and then selling a lot of calls and doing it very short dated, like 1 and 2 week. So you can pick up some premium music as you go along. You sell a put, and then as it gets close to the strike, then you got to figure out, so do I want to own it?
Yeah.
Or do I want to just roll the put down? because I'm worried that it could go lower. So, but we're not the only one doing this. And so I think that because a lot of people are using options more and more for portfolio construction and also for risk management, the options
they're expensive.
They feed the volatility.
Right.
Because, you can go in and have the notional amount of 100 and you only got to put up 15 cents, right? So if you want to buy $1, you only got to put up 15 cents. And so, the options market is definitely feeding all this volatility that's going on.
Okay, the next question in the mailbag is Amphenol. Love your opinion. This one coming from Paul on Instagram. In the last couple of months, it's down about 23%. Maybe not a household name. It's kind of how would we describe it? It's like a connector. It's got exposure to data centers and the defense sector. What do you like it?
We follow it. I don't own it.
Okay.
But we definitely follow it. So you're right. They're in a lot of stuff, all the way from interconnection routers and switchers and sensors and antennas and cabling, and it's all the connection stuff and it firmly sits in that platform layer on the AI stack. So you got the infrastructure, you got the platforms, and then you have the enterprise applications. And Amphenol is a great example within there, as would be, I don't know, like a Databricks or a Snowflake. The average price target there of the analysts right now is right around $150.
And it's 130 now.
And so you have, 15, maybe 20% upside.
If they're right, which...
If they're right.
Yeah.
Or you can actually look at Microsoft that's got like 30 to 40% upside toward their price target.
So kind of not an interesting name.
It's an interesting name in that platform, but it's not got cheap enough for us.
We recently had, I guess you could call it an IPO, but it wasn't. Xanadu Quantum Technologies, Canadian company. Question from Sask Rider fan on Instagram. I bought a position in Xanadu Quantum Tech. Any thoughts on the company? So Canadian, as I mentioned, went public via a SPAC. A lot of volatility, obviously out the gate. Small revenue. 2.5 million or something like that last year in the 9 months of 2025.
You'd have to put on a couple of more zeros on how much they spend.
That's right. Yes, exactly. But the goal, it's a dream stock. We're dreaming. We're going to build quantum computers. We're going to build a quantum data center. Do you play in these kind of dreams? Do you have these kind of dreams?
Absolutely. We own Ionic, D-Wave, Rigetti.
Oh, so you own all? Yeah.
Quantum, very small in quantum motion. But when you add, those 4 or 5 quantum stocks up, it doesn't account for more than 4.5% of our portfolio.
And what's the bottom line on why you own it? Quantum is still so new, so nascent. There's still a lot of problems with scaling. Yes, the potential is great, but it just seems like really big obstacles to get there.
If you listen to the smart people out there, whoever, this is the year of robotics. Everyone talks about 27, 28 being the years of quantum. And people have said that it's going to take the better part of 3 to 5 years, but you can see how quickly innovation is changing. I think that fuse is going to shorten up into like a year and a half or 2. Now, Xanadu, met with them, like them. I'm not a fan of going in on IPOs. because it's all about the price action. You never know. There are different factors that are coming in on the price action on an IPO that can create a volatility. And also, we want to see them go through at least a couple of earnings periods.
Yeah.
Just to see them in the hot seat.
Okay. Speaking of hot seat, I'm sure you get this question a lot, and we talk about it a lot on this show, but it's Constellation Software. Cut in half from where it was a year ago. It's down about 52%. No recovery. Lots of concerns about its ability to do M&A, about the value of its software companies in an AI world. Mark Leonard effectively departing, now not even going to be on the board anymore, I think is a concern. It's happening at a time where it's almost like an existential crisis for this company. What do you think?
We did own it, and I drew a line in the sand, or a line on the charts at 3,500. And got all the way up to what, 4,800?
Yeah, above 5,000.
Yeah.
So then your sell
was at 3,500. And it was just a technical point, moving averages and so on. And then we haven't weighed back in. I always get the question, here it is, what is around 2,400, I think, right now. I think, portfolio managers, hedge funds, got out of the way, much like us, and then are waiting for the management team to go through a couple of earnings periods. Mark Leonard, he designed the whole succession thing. And those folks have been there with Mark Leonard through thick and thin, and they know the business. But now it all comes down to execution. Can they execute as well as when Mark Leonard was steering the ship?
Now, and this question came from Amy Loves BC on Instagram. So shout out to Amy for participating in the show. The thing I wonder about Constellation is, yes, there's those anxieties. Fine. You can say succession planning shouldn't matter because it's another Mark that is the head of the company. It's Mark Miller that's now the head of Constellation. He grew up with Mark Leonard and fine. But it also seems like they're switching up their M&A strategy. They're doing this, they call it PEMS, like permanent equity minority shareholder. So they're buying stakes in public companies. And on one hand, you can argue, well, they're taking advantage. It's because there's a lot of cheap software in the market. But on the other hand, like part of what Constellation was so good at, wasn't it that they were cleaning up these businesses and increasing the operating efficiency? Don't you just have less of that ability if you're just like just a shareholder? Maybe you're a more vocal shareholder, but you're just a shareholder in a public company?
I would imagine Mr. Miller, because he's been there since the beginning, that now that you have, what is it? It's like 300 companies under those 7 pillars.
Yeah.
And so if you buy a private company, how much is it going to impact? Even if you do a wonderful job, how much is it going to impact Constellation Software, the company? And so they have to make bigger, more calculated bets. And I haven't talked with Mr. Miller about this, but I've seen what he's been doing, and I'm not surprised that he's trying to make an impact, maybe try to stop the bleeding and make an impact buying some of these public companies because they have a heck of a lot of cash and a need to actually do these acquisitions. But every small acquisition is going to have a smaller effect on Constellation.
Okay. And so not a name you're looking at.
Oh, you
look at it, but you're not buying it.
We don't buy it yet.
Okay. One more question in the mailbag before we get into pro picks. Nebius. not a household name, one of those consolidators. It's been doing nothing for months. Its business is interesting. It's kind of is this right? It builds the AI workloads for the AI builders. So if you're a builder in AI, you're using Nebius to help you out. Do you like that? This question coming from Peter in Vancouver. Thank you, Peter.
Is that the famous Peter?
It's from the famous Peter, yeah. We've got a Mark in Calgary and on this show, and then we have a Peter in Vancouver.
So we actually own Nebius, and recently we've been adding to it. We love this name. We've known them we knew them when they were Yandex. Remember Yandex?
Yes, yeah.
Out of Russia. So
Russia, yes. Oh, that's what this is.
Yeah, so it was sort of the...
It was something totally different then.
Well, it was the search engine, so it was sort of a Google and Walmart.
Yeah.
And then with all the sanctions and everything, they had to get out of Dodge, and so they moved to the Netherlands. So there were three of them. Two of them started up Nebius. The other one went to Israel and has a bunch of private things. And Nebius has really carved out a niche, and it has a pretty decent moat in Europe as being like a hyperscaler available in Europe on the hybrid side, both. So they'll help companies that want to keep some of their servers in the enterprise, but also go into the cloud and data centers. So, and they're terrific operators. So we really, really like Nebius.
Okay. Let's go into the pro picks and get to some of your high conviction ideas.
Okay.
Pro Picks is brought to you by ATB Financial. With over $100 billion in assets, ATB Financial is powering possibilities for more than 843,000 financial services clients. ATB Cormark Capital Markets is a leading North American investment firm providing holistic corporate and capital markets advice and full-service financial solutions. Visit atb.com/inthemoney for more information. Okay, so you've already made clear the world that you're looking at. You're looking at the AI vendors, and you're looking at the AI end users.
Correct.
And I would say your picks are both that you brought. You brought Lam Research, Palantir, and Walmart, which I'm excited to dig in with you. Let's first start with Lam Research. Where does it play, and what do you like here?
Well, when you look at so Lam Research is an equipment supplier in the semiconductor space. So you have Taiwan Semiconductor that is the king of the foundries. And then on the equipment suppliers, so Taiwan Semiconductor buys Lam, they buy KLA, they buy ASML, which is the lithography etching thing. It's a tough business to break into because it's hugely capital intensive, just like TSMC. But it's American. And so it has a great appetite for Intel in America. Its second largest customer is Samsung, and the third largest is Taiwan Semi. So they're just one of the three. There are other sort of periphery ones like Bentley's and so on. But those are the main three.
So I've seen two notes of caution around Lam. One is you can call it acute, but because of the issues in Iran, there is helium, shortage of helium. And I didn't realize. So you need helium for tool production. And so is that a higher cost of helium? Does that materially affect something like their margins? And because it's acute, maybe a short-term sort of situation, do you let it bother you in your bull thesis? And I'm not that worried about Iran. I'm more worried about
because they used to get a lot of helium from China.
Yes.
And China is a huge customer of their equipment, of Lam Research.
Well, that was going to be my second thing that's a bit longer. Because the U.S. is trying to crack down on even selling chip-making tools to China. And I'm looking on Bloomberg, it looks like 30% of their, I don't know if it's their total sales or just international sales, come from China.
Yeah.
So why are we owning Lam when the government seems like they're going to throttle back on their ability to sell there?
So they can still sell into China. They're not like ASML that, the government has said, no, you can't sell to China. Lam can sell to China, but they have to get the approvals. On the helium, Lam actually has struck a deal with Russia. Funny how you can sort of work out these deals on the sidebar.
Benefited the most from this, but we'll leave that alone.
And I'm sure Mr. Trump probably gets a royalty out of it too on top of it. But so it is an issue, and if they do crack down further on selling Lam equipment into China, or crack down on getting the helium out of Russia, that will be a problem. But it's it is an American company. It's not like an ASML, which is a Dutch-German company.
Okay, so we like it even though there might be some hair on it. Your second one, speaking of hair, is Palantir.
Yeah.
You tell me why you like it. It's down about 30% from its October peak.
Yeah.
Again, probably caught up in just the vibes, which is we're no longer thinking tech is fashionable. And in a weird way, defense has also pulled back, and it's also a defense stock. Even with the war starting, defense people have been using that as a sell the news event. Mm-hmm. So what's going on with Palantir? Why is it attractive here?
And Amber, you asked before, I think it was about Xanadu, whether we buy into like an IPO. Palantir was interesting because I think it IPO'd at like $18, scooted all the way up to the mid-30s, but then crashed all the way down to single digits. That is a great example of why we don't buy IPOs, because that's more than often, that's what happens. Now, Palantir, it has very, very deep pockets from the likes of Peter Thiel. Deep money pockets, but deep brain pockets. And Alex Karp is one of his turtles, his proteges out there. Why do we like it? They have two businesses, Gotham, which is sort of the government stuff, defense stuff, and then they have Foundry, which is the enterprise. And the Foundry is just exploding because of the AI being employed, embraced by enterprises.
And that's what you said earlier in the show. Yeah. You want it not just in the IT department, you want it in HR, operations.
Yeah, yeah. And so like on the Gotham side, they wouldn't have pulled off the Venezuela raid. They've admitted it. Like
without Palantir.
Without Palantir. Because they did all the logistics. It's amazing, right? And,
no, I kind of don't like that.
But then, over the next 6 to 18 months, I think Palantir is their revenues are just going to absolutely explode coming out of the Foundry side.
Is that how we justify a triple-digit earnings multiple?
Yeah, absolutely.
Okay. All right.
Absolutely.
Asked and answered. Okay, I want to dig into your third pick, which is Walmart.
Yep.
Walmart is an AI stock. Mm-hmm. That's your thesis.
Yep.
It switched to the NASDAQ, and whereas I think we could comfortably say no one's looking at a United Health or whatever as an AI stock. People really are looking at Walmart as an AI stock. Mm-hmm. Where is it showing up? In the business.
So it's It's showing up in the fulfillment centers, as we talked about with the robotics. Walmart is the second largest of public companies out there that are buyers of robotics. Not just arms, but actually humanoids that they have doing tasks around the warehouses. Soon, when you go to the Walmart store, there will be humanoids there. There will be those Optimus robots.
No greeters?
They'll be your greeter.
Oh my gosh.
Be your greeter.
Okay, sorry, Barbara.
But then, it's also there are many companies, some Canadian companies, like an OpenText, that are huge into the logistics, supply chain logistics, that have gone to Walmart and shown them how they can, if they can have access to Walmart's data, then they can figure out the fastest and cheapest way of getting a widget from point A to point B.
Now, don't you still have to worry about the economy, the consumer, their ability to sell merchandise?
Absolutely.
Right? So historically, we only paid a certain multiple for that kind of business.
Yep.
They have continued to execute, and they do well in a high inflationary environment because the middle class then starts going to Walmart, maybe in a way that they weren't. Now they've got an AI layer 43 times for Walmart.
Mm-hmm.
That's fine.
And if it gets cheaper?
Yeah, but what if it doesn't?
All the better, because we don't have a full position.
That's good perspective on these picks plus the option strategy. Kim, thank you so much for joining us on the show.
Thanks for having me, Amber.
That's Kim Bolton joining us of Black Swan Dexteritas. Don't miss our next episode. We've got Brian Belsky of Humulus Investments. If you've got questions, you can email us questions@inthemoneypod.com, and we'll see if you can answer them. We'll see you on the next episode.